Okay, Craig Bolanos joining us now. Always great to chat with our good friend Craig, co-founder, wealth advisor at VestGen Wealth Partners. Get retired, stayretired.com. Craig, I'm going to give you some numbers and I'm going to ask you a question, okay?
Yep.
Okay, producer price index, often a prognosticator of where inflation might be going, up 6% month over month. We are seeing high delinquencies. In fact, the highest credit card delinquencies over 90 days since 2011. The highest student loan balance is now 90 days delinquent since the highest number since 2020. The highest 90-day auto loan balance delinquencies, that's the highest on record at 5.6%. Craig Bolanos, are we just spending ourselves into debt and this whole thing's going to break apart? Walk me back from the ledge, my friend.
Well, I don't want you to stand by the ledge. Nobody should. We should have pragmatic optimism on a Wednesday evening, because last time I checked, the S&P 500's up over 7,400. This is a very good spot to be. And clearly, if the market, Mr. Market, was worried about the big spike in energy that grossly rose the PPI prices you mentioned today, it would have been reflected in the tape, and that we haven't seen. So I believe that longer term, yes, a large part of the K-shaped economy is heading to larger problems, and the problems are already brewing. But I think for the market and people who have 401ks and IRAs, growth is the path of least resistance going forward.
Is there any chance the market's out of its mind, Craig?
Everybody wants to know if the market is disconnected from the fundamentals, and my answer would be no. We have to look at the fact that we're having massive productivity gains, once again coming from technology, a lot of that coming from the deployment of the resource that is artificial intelligence. And we also have to celebrate and love a good revenge story. And the revenge story is a revenge economy right now. You have industrial stocks, material stocks, defense stocks, energy stocks, all these stocks that haven't been leading the market. Boy, they are participating. That's creating increased market breadth. We're no longer a one-trick pony in the S&P.
Yeah, I know the market really widened out, especially in 2025, which was good to see, right? I do feel like in the last couple, I mean, you follow this way more close than I do, Craig, but I do feel like we've started to narrow ever so slightly in the last couple months. Semiconductor stocks making up roughly 18% of the S&P 500, yet 70% of the index's increase in market value this year. There's just a couple areas where I worry that we're beginning to hang this all on AI in a way that seems a little unhealthy to me.
Well, I feel like you want me to start going pippity-pop with bubble stories. We're just not there yet, right?
Okay.
I mean, this is not .com, that's a .bomb. Now, remember, never say this time it's different. Rationalizing that this time it's different are the most four dangerous words when it comes to an investment theme. But the reality is the trend remains people's friend. And this market's continuing to climb a wall of worry because the single biggest secret has been, I guess we'll just give the secret again away, John. The U.S. economy is healthier than consensus thinks. Now, You're going to rebut and say people don't feel that way, but the numbers overall don't fib.
Yeah, I'm generally optimistic, Craig. I think I just, if we're both optimistic, it makes for bad radio. But I guess there are little parts of my brain that flash yellow sometimes and wonder. And that's okay, though. People wondering, and I imagine a lot of your clients are too, that's a good thing. It's good to question the norm or what the general consensus may be or question where the market is. I'm sure that's what you do. And when you do that with your clients, you find ways to make their plan a little bit more flexible to their worries.
Well, that's exactly what we do, John, because I would argue the biggest danger isn't exuberance in tech. The biggest danger is not the hot inflation print we have from the oil spike. The biggest danger we have is complacency, and complacency is fueled by recency bias. After you've had back-to-back-to-back, which could be a four-peat if things keep up this year, people assume that the recent past is going to be the same as their near-term future. Guys, that might not be the case, because when you have the market trading at these multiples, there can be air pockets at any time, but growth has to come completely from something called earnings. It can't come from multiple expansion. So I think people should temper their enthusiasm, but remain pragmatically optimistic while they rebalance into things that artificial intelligence can't reprice and can't replace.
The president in China, this is a big summit. What are your big takeaways here from this thing getting started?
Well, you know what? I'm happy to take my eyes off Iran, even though Iran is a big part of the summit. Let's not kid ourselves, given the amount of oil that the Chinese get through the Straits of Hormuz. But I do think it's good to see that talks are continuing to happen, right? I mean, a functional global economy is one through which leaders actually have summits and discuss trade and discuss artificial intelligence. I don't pretend that the U.S. and China are aligned, but I celebrate the fact that there's actually talks and discussions as opposed to things that aren't making progress.
I do think there's something that each of our countries can contribute to each other in our AI. I don't want to call it a battle. We're just different on how we use AI. The Chinese, much more open to AI. They like the more tactile AI, the robots, those sorts of things. The U.S. leading the way in generative AI, which could end up being the bigger moneymaker overall. But I do think there is something that is very valuable between these two countries coming together, while at the same time recognizing, while we may not be enemies, there's certainly secrets and trade secrets that we do want to keep.
Yes, no, I think all of that is spot on. There's no doubt about it. But I do want to say this. It is an artificial intelligence arms race. It has been an artificial intelligence arms race. It remains an artificial intelligence arms race. I'm reminded that every time I see these drones on TV, Iran, U.S., because what happens when you just have truly pure autonomous drones? It's a game changer. So we do need to be the de facto leader in AI. I am so proud that this country has the energy. I'm proud that we have the data centers, because that gives us an inside lane, not a guarantee to win, but it puts us in P1. That's position one for all those of you who are fans of F1 racing, and I like being in that spot.
Yeah, and we keep on taking Chinese talent. I mean, a lot of them don't stay there. They get their degrees here and they stay here. And for now, I'm happy with that arrangement.
Yeah, I think so. And I just want to say this, too. For as optimistic as I come on, John, I've been optimistic for 3.5 years now, because far too many people 3.5 years ago went on to Recession Island. But that's not agency or license for people to not pay attention. Dollar cost average. It is time in the market, not timing the market. But near term, your listeners of this great show, yeah, the S&P probably is near term overbought. So be patient, use wide scale, buy great companies of America and the globe. This is a global story with de-dollarization. And when you follow those basic tenets, you too can be directionally correct and successful.
Wrapped it up perfectly, Craig. Right on time, too. GetRetiredStayRetired.com. Craig, we'll talk soon, okay?
Sounds great, John. Thanks for having me back.